In this video, I will show you how you can find some high quality stocks, high quality companies. We will use a screener. I will use specific metrics so that you can copy paste this technique and do it yourself, basically. So my starting point for this video will be Fair Isaac, will be FICO. This is a company that I believe to be high quality. And I asked myself, what are the key elements that make Fair Isaac a high quality name? So I scrolled down to have some metrics, and it turns out that, well, I'm scrolling down. I've been looking at this company for 5 years, so now I really understand the business model, etc. And if you look at the metrics for Fair Isaac, you see that they have very high gross margins. If you don't know Fair Isaac, FICO, they do the FICO scores in the US. So if you are looking for a mortgage in the US, you are likely to have a score. If your FICO score is high, banks will lend you some money. And if your score is low because of bad repayment of your past debt, your score will be low and you aren't likely to get a very good loan from the bank. And it turns out that this business is a monopoly in the score segment, and the score segment is growing very fast. It's a very high margin business model. They have some software part, some score part, analytics part, but okay. Global big picture of this company is gross margins 80%, operating margins 40%, net margins 30%. This is an extremely well-run business model. And if you look at the charts, you look at revenue growth. Revenue has been growing consistently for the past decade. Net income is same thing. They have some debt. They have what, $2 billion of debt. Comparing this with their market cap of 50 billion, so dollars, so not that big of a deal. They produce, look at this in blue, that's the free cash flow. More free cash flow every year. The ROIC is increasing. The return on invested capital is growing from 10% to now 40%. So efficiency is improving every year. And they don't dilute shareholders. In fact, they do some buybacks when the stock is trading cheap. So you see here in 2022, the company bought back 8% of their shares. In 2021, they bought back 5% of their shares, and in 2014, 8% of their shares. When the stock price is declining, they buy more shares. So very good news. That's fine. Why shouldn't you buy the stock right now? They trade at an extremely high valuation, PE ratio of roughly 100. PE ratio more than 60, so definitely a stock that has performed really well recently, now declining a little bit. But if you had invested a few years ago, you would be very happy. And if you had invested in this business 10 years, 15 years ago, you would be very happy. So this is the definition of a high quality business with an extremely high moat, pricing power, monopoly, increasing margins, increasing efficiency, etc. So now you know the drill. You know the formula to create the high quality stocks. I am on FinChat right now. I believe FinChat is an extremely good screener to find some good investing companies. And by the way, let me tell you, if you are new to this YouTube channel, that this is a stock channel for stock pickers. So we will focus on specific stock names. My name is Christophe Nour, and I've been investing in the stock market for almost a decade with a performance of 25% per year, including high quality names. So the goal of this YouTube channel, in case you are new, is to find such gems in the stock market. So okay, what are the criteria you should put in your screener to find names, to find companies like Fair Isaac? Well, we started with gross margins. So I will put gross margins on average for the past 10 years must be above 70%. And if I run the screener, I will have plenty companies, like more than 250 companies. Okay, I want the ROIC, return on invested capital, on average for the past 10 years to be above, let's say 10%. If I run a screener, I will find again an infinite number of companies. I want the free cash flow per share, levered, unlevered. Let's put anyway levered, a free cash flow per share growth of 10% as a CAGR, like a compound annual growth rate. I want the free cash flow to grow 10% per year for the past 10 years. Again, I have a lot of results. Do I have FICO here? Yes, FICO is still here. What should I put also? I want to put the buyback yield. Shares outstanding over the past 10 years should be negative because the number of shares has reduced because of the buyback. So maximum 0 or maximize -2. That means I want the companies, on average, for the past 10 years, I want these companies to have bought minimum 2% of their shares every year, on average. And if I run the screener, it will eliminate all the tech companies that issue some shares. And you see here I have 9 results, including FICO. Okay. It was quite easy, guys. Here it is. You can take a screenshot. I have found other high quality names with similar characteristics. Visa and Mastercard, well, they have very, very high margins. So let me check the margins for Visa and Mastercard. They are the same business model. They are very famous and big companies. Gross margins at 80%. You see that we have the same charts up and to the right. Some debt, yes, but the ROIC is increasing. Free cash flow is increasing. Life is good. PE ratio for this year of 27. Mastercard, same thing. We have extremely high gross margins. I mean, net margins at 50%. I couldn't name 20 companies with a net margin of 50%. This is some extremely good efficiency, high profitability. Forward PE ratio of 30. Okay, and everything is converted into free cash flow. And what do they do with the free cash flow? They do some buybacks every year. And the ROIC seems to be decreasing and the debt should be increasing, so the story is a little bit different, but you get the idea. Booking, let's check Booking. I'm not familiar with Booking business model. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The market cap is $150 billion. This is the travel agency we all know. I have not done any due diligence on this one. I know they are in a competitive space with Kayak and Momondo. Operating margins at 30%. What are the gross margins for Booking? Gross margins are 87%. Wow, that's some. I mean, that's a software, that's a website, so they have high margins. Forward PE ratio of 22, I expect some strong growth. Yes, look at the growth for revenue up and to the right. What happened here? Oh yeah, COVID happened, so nobody wanted to travel. Okay, back to reality, back to life. Net income is a little bit more volatile. Okay, very well. Now you start to see you have some differences between these nine names. I mean, Visa and Mastercard, you can't kill them. Even if you have a pandemic, you can't kill them. And free cash flow, okay, up and to the right. Same thing, you have some slowdown during COVID. And what about the buybacks? What about the buybacks? In 2019, they bought back 9% of their shares. Now in 2022, they bought back 8% of their shares. In 2023, they bought back 9% of their shares. Seems like a very, very good candidate for a quality name. PE ratio of 30 for 2024. And for 2025, the PE ratio, so now forward PE ratio, is 22. Price to free cash flow of 20. For a business that generates a lot of free cash flow. That could be very, very interesting. Very interesting. Okay, next one, Fair Isaac FICO. Well, we started with this video. MSCI, same thing. We are in a very high quality competitive position. Market cap is $50 billion. MSCI is that's a software service. They do the indexes. It's a software business and they focus on institutional funds. Gross margins 80%. Net margins, free cash flow margins at 40 or 50%. Here we are, guys. PE ratio of roughly 30. Same thing, revenue up and to the right. Net income is growing nicely. They have some debt, okay, that's interesting. They generate some healthy free cash flow over the years. Look at this. Free cash flow follows net income. You don't have much capex. You don't have much reinvestments. They don't do M&As. They just grow organically. They grow what, 12%, 10 or 12%, maybe 10, between 10 and 15% per year, continuously, and the ROIC is increasing, which is great. The ROIC, the return on invested capital, like we saw for Fair Isaac, went from 10% to now 25%, and seems like it's stabilizing above 20%. And same thing, they do some heavy buybacks. In 2015, they bought back 10% of their shares. In 2016, they bought back 10% of their shares. 6%, okay. This is a clear story, and the stock has not recovered since the 2022 drop. So this is not a fast growing company, but it is a company that can grow 10-15% per year for many years. For many years. If you look at the stock chart for MSCI, if you had invested in this business, this stock 10, 15, 20 years ago, you would be very happy. I'm guessing you can have a 10, 15, 20% per year if you had invested in this stock. Next one, Winmark Corp. Okay, ticker symbol WINA. Winmark Corp. I don't know what they do. Franchisor of value-oriented retail store concepts that buy, sell, and trade gently used merchandise. Okay, franchising, leasing. I don't know much about this industry. This is a small company, so a good candidate if you want to invest in small caps. $1 billion of market cap. The company has been on a run. If you look at the IPO, the performance is IPO since 1993. The company has been literally up and to the right since 2008. That's more than a 10x, maybe a 20x. Very high margins. Maybe I have to go deeper on this one. 95% gross margins. Operating margins, very high. Net margins, 50%. That's immense. What about the growth? The company doesn't grow much. So okay. Same thing for the net income. Net income doesn't grow much, so I guess they don't have many reinvestment opportunities. When you have this situation, guys, maybe it means that the market is saturated, so you can't grow much. And in this situation, you pay all your profits to dividends. You pay dividends to your shareholders because you can't reinvest. They have some debt. $70 million of debt compared to a market cap of $1 billion. That's no big deal. The ROIC is increasing by a lot. The return on invested capital is increasing massively. Maybe I want to double check. Maybe they don't have 200%. Maybe it's a cheat in accounting, so I want to double check this. And what about the free cash flow for the business? Free cash flow is strange. Free cash flow has improved significantly in 2019. So maybe I will keep you posted on this one. I will continue the analysis and see what happened here. And seems like they do some nice dividends. In 2023, they generated $44 million of free cash flow and they paid $44 million in dividends. In 2022, they paid half of the free cash flow in dividends. In 2021, they paid almost all the free cash flow in dividends. So it seems like they love dividends and they do some buybacks sometimes. They bought back 17% of their shares in 2015. They do some nice buybacks over the years. I will continue the analysis. I will keep you updated. That seems like a quality names. And what's the valuation on this one? P/E ratio of 30. Yeah, a good name to add to the watch list. Not necessarily to buy right now, not necessarily to buy today, but to monitor and wait. What is this one? That's the pharma company. Consum Pharma Group Limited. That's a Chinese pharma group. I don't think that's inside my circle of competence. 1681. China market cap is below $1 billion. Gross margins extremely high. And they do biotech company. Okay, this is out of my circle of competence, so I won't touch the stock, regardless of the financials. Revenue up and to the right, net income up and to the right. They don't have much debt. They have a lot of cash. They produce a lot of free cash flow. They pay some nice dividends. Look at this, boom, dividends. The ROIC is above 20%. They do some dividends here and there. They don't have liquidity issues. The PE ratio is 6. The price to free cash flow is 6, so extremely cheap company. And the stock has been on a ride. Let's check this. Whoa, that's some funny chart. Okay, if in case you are interested in a Chinese biotech, you have a very good candidate, very high quality. What about this one? 531 556. It is an Indian name. 531 556. Coral India Finance and Housing Limited. Indian name in construction and engineering. Let me check. Oh, micro cap, $20 million in market cap. Very, very small housing development company in India, so pretty easy to understand. Gross margins 90%. Net margin, wow, okay. Free cash flow margin 30%. PE ratio of 8. PE ratio of roughly 10. Price to free cash flow of 40. I'm expecting a messy chart. Yeah, look at this. Look at the difference between free cash flow and net income. Here, the blue and the green. That's messy. I don't know what happened. Wow, the revenue is very, very volatile. Seems like they sold one of their division. I don't know what happened. I wouldn't touch the stock. Maybe in case you know this industry, feel free to do the analysis. And this one is the last one, and I will end the video with this one and some tips. SAIG, Saudi Egyptian Investment and Finance. Oh, that's a fund. I guess that's a fund. Funds usually have high margins, and that's normal. $2 million of market cap. That's very micro. I wouldn't look at this one. I don't want to look at this one. It will be very illiquid. No broker would allow to trade this name. My broker would not allow this name, but you can do your own due diligence if you want. So now you have the criteria, and once you are done with analyzing the 9 names, you can play with these numbers. Maybe you want to invest in high quality names, and instead of having shares outstanding of -2%, if you have between -2 and -1%, you can play with other buyback candidates. You have other names. Adobe, Ashted, Sonova Holding, and you have 11 more names. And maybe you want gross margins that are, let's say, between 65 and 70. That's also a high margin business. You have 3 other names. Check Microsoft. Maybe you know Microsoft, but do you know Zoetis and Cryocell International? That's it. And this is an infinite game. You can adjust, play with some numbers. This is how you can find some high quality names in the market. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.